Good morning, good afternoon, good evening, depending on when and where you will be seeing this video from. This is Mr. Akimbode, the King of Waves, and today we are going to be looking at the forex market together, looking at the market from the global macro perspective. And this is how we come every week and we overview the market, looking at the fundamental at the global level, the sentiment, and of course, we want to catch the trade from the perspective of the technical narrative, uh, from a top-down analysis. That is very important for you to know, and this is the scheme or the framework of our analysis at Potential Miners International, a research platform dedicated to quality researches in different aspects of life with the aim of identifying or harnessing opportunities and potentials for human kind, whether at individual level, at corporate level, or even at government level. Today, being the 10th day of March 2026, we are going to be looking at the market together like our usual practice. I want you to follow me very closely, and of course, I promise that today's analysis of the market is not going to take much of your time. Last week, we overviewed the market, and based on the current conflict in the Middle East, we noticed that we have a template of a risk off. And of course, today we want to start with the fundamental analysis before we even dive straight into uh, the sentiment analysis to confirm whether our risk on or risk off, I mean to say, is still what is playing out for this week. So at the fundamental level, what we do is we look at the interest rate of the major currencies, and this is very important for us to overview as much as we follow other economic indicators in the likes of the inflation rate, the unemployment rate, the employment figures. The focal point of our fundamental analysis is what we want to see, what is going to be the transmission effect of each of these economic indicators on the position of interest rates, and of course the trajectory or future changes that can come to the interest rates. So for today, 10th of March 2026, the interest rate, the highest interest rate among the 8 majors happens to be Australian dollar, which stood at 3.85, followed by both United States dollar and Great British pound with 3.75%. And looking at Canadian dollar, we have 2.25, New Zealand dollar 2.25, Euro 2.15, Japanese yen 0.75, and Swiss franc, the currency that maintains the status of the safest safe haven, maintains or has interest rate of 0%. Now, the implication of the interest rate overview when we come to our fundamental analysis is so that we can shortlist assets with a very wide divergence, because the interest rate divergence is one of those key factor that determines whether a particular currency pair is going to trend up to the upside or to the downside. And this is very important if you want to be trading the financial market. I mean to say the forex market in particular now. You want to be trading the forex market from a professional standpoint. You need to take cognizance of what is the position of the interest rate of any of the currencies that you want to trade. So as for today, or as of today, 10th of March 2026, the focus of our pair of currency will now be that we want to pair Australian dollar with Japanese yen, Australian dollar with euro, Australian dollar with Swiss franc. The same thing goes for GBP. We pair it with JPY. We pair USD with JPY. From the fundamental standpoint, these are the currency pairs that has the likelihood of having a very clear direct or upward trend or downward trend, depending on which of the currency is the quote currency or the base currency. So having said that, we want to quickly overview, apart from the position of the interest rate as of now, what is our expectation for the week in terms of news releases? So today is Tuesday, and for today, looking at the Forest Factory calendar for news events, we don't have any news event that can shift the standpoint of the interest rate that we have just overviewed. Tomorrow being Wednesday, 11th of March 2026, we are expecting news for the cost CPI, which is very central. You can see that the impact is even showing red. That's to show you that this is very important. And interest rate, inflation rate data measured in terms of consumer price index is one of the economic indicators that we overview at the platform. Although the focus is what is going to be the implication of this on the interest rate. That is our focus, because we are not trading the news directly, because if we do that, it's not going to give us a long-term perspective of that particular currency. So we want whatever indicator, whether inflation data, gross domestic product, which is output data, or the employment data, we want it to play out or to price in into the interest rate decision. And if we can have that, we are going to be rest assured that whatever we have is going to give us the projection for that particular currency on a long or on the average the intermediate term. So for today, no news events, I beg your pardon. Tomorrow we are expecting inflation data for the United States dollars, and that's the only news that probably will be necessary for us to take cognizance to for tomorrow. And of course, by Thursday, we are expecting unemployment claims. Then on Friday, GDP data month on month for Great British Pound. Like I said, you are not to really disturb yourself with some of these news releases, but it's very important for you to know, so that if perhaps your condition for entry match up, or you are able to see condition for entry, you will take cognizance of the time that this news releases will play out, so that you will not shoot yourself in the leg, even with your condition being met. You really need to take cognizance of some of these important news events, because if you are not careful, if you enter the market at the wrong time, the market can sweep you out, then later go into your direction as a result of the news releases. So it's very important. So the likes of United States dollars on Friday too, we are expecting the prelim GDP quarter on quarter. This is very important too, and it might shift the narrative of the interest rate for the United States dollar. So we have inflation news release for Wednesday. We have GDP news release for Friday for the United States dollars. While for GDP and GBP, we have the GDP month on month news release. So we are going to follow the market and overview some of these news release. Then it will only make sense for us to gauge when we have a condition or our position being met, or the condition for entry is being met. We will now check the calendar. If the condition is met now, let's say today we are expecting a news release by maybe in the next 3 hours or in the next 2 hours. If the condition is met now, we might need to wait for the news to play out if it's an high impact news, so that after the news we can probably now position for our trade, so that we'll not be standing in front of a running train or a falling knife. Is very important. So, but having said that, what is important for you to note is the intermediate or long-term perspective of the interest rate differences come in among or between two currencies. If you pair them, what is going to be the likely movement of these particular currencies given the divergence of the interest rate? So, and this is what we overview when it comes to the fundamental analysis. We want the fundamental phase or analysis of our framework to be very, very, very simple so that we can apply it. Otherwise, if you are not careful, you'll be carried away by a lot of news here and there. At the end of the day, what is going to really shift the market is going to be what is the interest rate divergence and where is the particular currency going when it comes to the interest rate. Are they going to be hiking the interest rate? Are they going to be cutting the interest rate? Or are they going to be holding it? So all these news releases will affect whether they will hike the interest rate or hold it or cut it. But whether you are looking at the unemployment data or unemployment rate, it will decide or determine or influence whether the central bank of that particular country is going to hike the interest rate, cut the interest rate, or hold it. So, having said all of this, we want to quickly now go to the second phase of our analysis, which I believe if you have been following us for a while now, you will know that the next phase is the sentiment analysis. And when it comes to sentiment analysis, we have 5 major indices that we engage. And I'm going to quickly run you through them. Then we are now going to pick assets that we can analyze together so that we'll look at what are we going to be positioning for this week or between now and next week. So the first indices or index that we gauge is the S&P 500 index. And this index is very important. We look at the daily position of the S&P 500. So last week we noticed that S&P 500 was trading below the cloud, and it was around this place, this particular candlestick. As at last week, it was below the cloud, but before the close of the day, before the close of the day, the candlestick corrected itself. So, and but ultimately the movement of the structure on the daily for S&P 500 is predominantly below the cloud. You can see that this particular candlestick closed below the cloud, and until this another candle now close above the cloud, we will still maintain that we have a risk of template in the market. So S&P 500 is showing us that there is a high likelihood or high tendency, or the market is more to the risk off than the risk on. Let me put it that way. So let's go and check the Dow Jones Industrial Average. We can see that for Dow Jones Industrial Average as well, the market is tilting to the side of risk off more than the risk on. What that means is that the index of an average of 30 stock in the United States is below the cloud or is having a bearish market structure. What is important is the structure of that particular movement or the particular index. Now, this particular cloud is just a tool that helps us to be able to look at the tide and the directional bias of the market at any point in time. So when we look at the daily, we want to look at, is the price trading above the cloud or is the price trading below the cloud? When the price is trading above the cloud, is a buy tide. When the price is trading below the cloud, is a sell tide, which means that predominantly the structure of that particular asset or index is bearish. For a buy, it means the structure of the particular index is bullish. So for now, we are on the side of risk off because this particular index is confirming what S&P 500 gave us to say that the index of the Dow Jones Industrial Average is showing a predominant bearish structure. So the last one we are going to use or check is the Nasdaq Composite Index, and this is clearly showing us that the price is below the cloud, and that the market is predominantly on a bearish market structure when it comes to this composite index. So having gauged all these three indices, we can conclude that based on the position of the stock market, we have a risk of template. And of course, this is being fueled by the ongoing war between the United States and Iran. And this is very important, that just like the war started without no notice, it can end anytime. So we can be back to risk on any moment in time. It might be in the middle of next week, it might be maybe before Friday, maybe war is now off. Investors will be back to the market with a lot of optimism to make money for themselves. So, but it is important for you to gauge the sentiment of the market from the standpoint of the stock market, and that is what we have done. The next thing we want to do is to see if we are still looking at this. Let's check the fear index, and the fear index is the fix is the volatility of S&P 500, and this is going to show us to what degree is the fear now. If investors, they are beginning to withdraw their capital from assets with high yield, and they are saving it into safe haven, or they are moving their capital into safe haven, then what is the level of fear? What are we going to be what are we expecting in the next 2 days, 3 days, 4 days? Are you getting it now? Are we in a position of pure panic, or we have a mild fear in the market? You will see that as much as we want the fear index to be below 20 for us to confirm risk on, for now, the fear index, which is the volatility of S&P 500, move as high as 35, but is narrowing down now, is currently at 25. What this means is that as much as there is fear in the market, the fear is declining gradually. I want you to pay close attention to this, because you cannot analyze this blindly. When the VIX is above 20, it is indicating that there is fear in the global market. When it's below 20, it's indicating that there is a level of stability and there's confidence in the market, and investors, they are ready to risk their money. However, you want to see what is the distance of the particular fixed value to 20, and where is it coming from. If something is coming from 35 and we are right now at 24, it means that the level of fear is reducing, although there is still fear in the market. I want you to pay close attention to this, and this is very important, and it's very clear to even overview. The fear in the market rose as high as 35, that was around from last week into this week, and as high as 35. You will notice that the value here is 35.22, but currently the price of the value of the VIX is below 35, below 30, below 25, and is around 24.91. So it means that all other things at constant, there is likely for this particular VIX of fear index to keep falling, as much as we still have fear in the market. So our conclusion will be based on what we can see. We don't want to assume, but you will take note that if the fear is reducing in the market, it means that maybe what is causing the fear, the tension, is reducing gradually, and it's very important for you to note. That is why it might be necessary for you to check at any point in time you want to enter the trade, to check the level of the VIX, check the level of each of these indices that I've talked about, so that you can conclude on what the risk sentiment of the market is at a particular time. So the last one we are going to look at is the DXY, and obviously DXY is showing that dollar has gained a level of strength, and right about now we cannot say that there is dollar aversion. So on the overall, we want to say that there is a level of confidence that is coming back to the dollar, and the market is still reflecting a level of fear, a level of fear as a result of the war. So we are going to maintain that the global market is on a risk off template as of today, 10th of March 2026. Risk off template. Remember, if you have been listening to me, I make it clear that we have four different types of risk templates. We have risk on, we have risk off, which is what we have for today. I mean, for today, tomorrow, maybe for the rest of the week, depending. Then we now have risk on dollar aversion and risk off dollar aversion. But for today, what we have, based on what we can see, is that the market is purely on a risk off template. So whatever we want to do, what we engineer the capital flow from the sentiment standpoint will be the risk of market overview. So having said all of this, let's quickly now dive into one or two assets. If we have enough of time, we will do 3 assets. Then we'll look at what are we expecting from each of these assets. Last week we projected that we are going to have a buy on gold. So let's start with gold. Last week we said that we are expecting a buy on gold. Why? Because when there is risk off in the market, expectedly investors should move their money from high yield commodities or currencies into safe haven like gold. But last week we mentioned that currently the structure of gold on the daily is bearish, and we will not do anything until the daily is showing us a bullish structure. So for gold for today, given the fact that the market sentiment or risk sentiment is still risk off, we are still expecting a push up on gold. But we will not take any position until gold breaks above. Let me just give us an hint. Gold is expected to break above 5,206. It must break above 5,206 if we are going to take position for a buy on gold. Please, I want you to take note. The reason why a lot of people just get to the market and the only thing they are looking at is the chart is because many a times they don't have a lot of valuable capital. Let me say it that way. Valuable, because when you want to throw your money into a global market, if you value the money, you will not just come and be looking at candlestick alone. Something should be able to tell you from a global standpoint why a particular asset will be buying. You don't just want to get to the market and be looking at candle that is going up, candle that is going down, and because of that you want to put your hard-earned money into it. And the reason why a lot of especially retail traders, a lot of retail traders, they are blowing money is because they don't put money there. I mean money, real money, quality money. Most of the time they want to go and buy profit and they are ready to blow it, and they will continue the cycle over and over. And if they now decide to fund their own money, they will fund money that even if they blow it, it might not really change anything. Any money that is below $50,000, $10,000, these are money that you can still blow anytime. You blow it, even if that blowing of the account will wreck you, you will still bounce back. But let's assume that the money you want to put in this market is 100 million US dollars. The reason why I'm saying this is so that people can begin to relax themselves when they are trading the market. You don't want to come here and gamble your money. The market is not a market for gamblers. It's just that a lot of gamblers, they are here now, and they are making the narrative of the forex market as if it's a market for gamblers. No, this is a global market where we have big banks, we have government, we have big institutions playing it. You, if you want to play in there, you must not view it as if you are just playing around. No, you must really equip yourself with a level of knowledge to the point that if you take any position, you will have a global perspective for taking the position. Of course, this is a market that is high on probability. That you have those rationale does not mean you will win all the time, but you will be able to establish an hedge for yourself. It's very important. It's very, very, very important. So on gold, we are not going to be doing anything until gold breaks above 5,206. 5,206. This is very important. Then we'll now be waiting for a corrective move on the daily. Then we'll go to our 4 hours. Then we'll go to our 1 hour to take position. That's what we'll be expecting on gold. And if you want to trade gold, I want you to pay close attention to what I've said. Don't do anything on gold. Of course, we are expecting a buy on gold. Anybody selling gold, it's obvious that that person is not looking at the market from a global perspective, because obviously the directional bias for gold is a buy. What that means is that the big players in the market, they are predominantly positioning for a buy on gold. And since your money cannot move the market, you want to queue behind those people whose money can move the market. Do you see why it's very important for you to really relax yourself and trade like as if you are a big bank? You must queue behind those people whose money can move the market. So if the directional bias is saying buy, I want you to take, I'm just using this opportunity to explain, to people that will probably want to come to the forex market and they will really want to make a career out of it. Imagine that you have been on gold since November 2023, and the directional bias has been telling you that we are buying, and you have been buying gold since November 2023. That is what you are expected to do. But a lot of times you see traders come, they want to buy now. That same day they will sell that same asset. Before the evening they will still buy again. What are you doing? Obviously you will just be moving in circle. If you make money in the morning, you will blow the money in the evening. So if you really want to trade like a professional, because that is how you can trade the market, and you will stay long in this market. Otherwise, if you trade as amateur or gamblers, you will not stay in this market for a long time. I give you maximum of 4 years. You will be frustrated. You will be frustrated. You'll be frustrated, and you don't want to be frustrated. So let's go to other assets. So on gold, let me reiterate. We are expecting a buy on gold. If the risk off template continues, we expect gold to close above 5,206. 5,206. Then we will now position for a buy on gold. That's what we want to be doing. You get that now? It's very important. So we'll wait for the market to decide, then we'll position. So let's go and check what is happening on BTC. Let's overview BTC. For BTC, it's clear that we are on a bearish directional bias. Bearish what? Directional bias. And it's very important for you to take note of that. If you want to do anything on BTC, I will encourage you. For now, don't buy, because even if BTC shows a buy, it's going to be a short buy. We expect BTC to correct. This is a corrective move, and it depends on the template of the market. BTC can do like this, and the next thing you will see, because it's already correcting itself, the next thing you will see is BTC, drop down to, we are expecting BTC to come to this side. Let me see. BTC Today is okay. We are expecting BTC to come to 50,000 plus or minus. We are expecting BTC to come to 50,000 USD. You get it now, per coin. So if you are a trader and you want to engage the market and you want to trade BTC, please don't take a buy on BTC. Whatever you want to do, let it be a sell. I will encourage you, whatever buy you see on BTC is not going to be a long buy. All other things at constant. Whatever you see on BTC will be a short buy if you see any buy at all on BTC. That is if you see any buy on BTC. Maybe it will come here, narrow down to this place, which I believe BTC has already done something related to that. You will see that it came to this side, hit this place. What we are expecting next on BTC is that this particular asset will move like this, break this structure, then correct itself like this, then break structure, then correct, then break structure. I want you to just take note of this. This is going to be the overview of BTC. All other things at constant. You get it now. So if you see any buy on BTC, you might need to be very cautious because BTC is heading down to 50,000. All other things at constant. Do you know why I always say all other things at constant? We are not expected to predict the market and we will now be taking action based on the prediction. We are looking at what the market is doing. So, and what it's doing is showing us that it's about to sell. But this is a global market. Anything can happen in the market. So when BTC begins to buy, we will not take any buy until BTC close above this cloud. Until BTC close above this cloud. And that is more than likely, at least for now, especially now that we have a risk off environment. Most of the time when there is a risk off, BTC will be selling. Because when there is risk off, people, they are panicking already. They want to err on the side of caution. So anybody that has investment in BTC, given that is an electronic coin, they want to remove their capital and save it somewhere that at least they can say, I can see my goal. This is my, something like that. So if there is a risk of template, the tendency that BTC will sell is higher than it will buy. Not to now mind the fact that the directional bias for BTC is already a sell. So expectedly, all other things at constant, BTC is coming to 50,000 per coin. So having said that, let me just look for one more asset to do so that we'll call it a day for today. If you really want to be part of our trading system, or you want to engage our trading system more, you can join our Telegram channel. It's free. So last week we posted 2 trades, one for gold, one for CHF JPY or USD JPY. So it's either you pick CHF JPY or USD JPY. So the gold happens to be a loss, and we picked that, was it not, maybe on Monday. Then we now pick CHF JPY or USD JPY, and it delivered. So last week we had 2 trades, one for gold, which happens to be a loss, and for cash flow model, you are expected to risk 5%. Cash flow model, you are expected to risk 5% of your account. So for the gold, you lost 5%. Now, for the CHF JPY or USD JPY, any of our, our community traders pick, it ended up as a winning trade, and that gave us ratio 1 to 4. which means you are expected to make 20% of your account on that particular trade. So if you subtract the 5% that you lost from the 20% that you gain, for last week you did 15% of your account with 2 trades. So that is how we trade. The whole of February we close 20% for February. The whole of February we enter the trade every week and we close 20% for February. This week now, last week we did 15%. This week we are still looking at the market. We have not been able to cash any trade. The trade that would have cashed was on GBP JPY, but it happened earlier than expected and we could not pick it. So, and that is just by the way. So we could have caught a GBP JPY by early this week. That's Monday, but then the trade is gone now and is about to even take profit now. This was the chart, and it came down to pick us. I didn't enter this trade. I did not enter this trade as at when the market opened, it picked, and that was because the USD JPY trade has not delivered profit yet. It was still very close to the take profit, and we cannot enter USD JPY, enter GBP JPY again. It's like we are exposing ourselves like 2 times. So it's not going to make sense. So by the time USD JPY close, these has already peaked. So we could not enter this trade again. So, and assuming we were able to enter this trade, we are already going to ratio 1:4. If we decide not to trade anything for this week, we have done 20% of our account. But that's by the way, I was not able to pick this trade, but we are still positioning for another trade for this week. So we might be like, we are expecting USD JPY or AUD JPY, depending. You see AUD JPY, this was supposed to be a trade that we pick yesterday, but I didn't pick this trade because the narrative of the market is still risk off. During risk off, we expect that AUD JPY will be selling. However, this buy that you saw here is as a result of the massive correction on the, you see this one, you see this particular correction on the fix. So the fear in the market dropped significantly from 35. You see that now. So because this fear has dropped, AUD JPY, bought, and we cannot project the market like that when the sentiment is not clear. So when we now see a clear sentiment, now we can now position for a buy on AUD JPY if the fix continue to fall, and that means we'll be moving away from risk off into risk on. Do you see it now? But because we were still on a risk on, on a risk off, I beg your pardon, we could not take this trade AUD JPY yesterday. So, but we'll pay close attention to the market, pay close attention to the S&P 500. If the market open around 3 p.m. or 3:30 p.m. and this jumps up, then it means that confidence is coming back to the market, and the VIX index will probably go below 20. That means we are now back to risk on. Are you seeing it now? So you don't want to predict what the market is going to do. You will follow what the market is doing. That is what you are expected to do. That is why we follow the wave. We are king of waves because we follow the wave. So we are not trying to predict the market, where it's going, where it will not go. We only follow the wave, and that's how we do it at Potential Miners International. So let me just summarize. What assets are we looking at and what are we expecting? For gold, we are expecting a buy on gold, and we expect gold to close above 5,206. You can see that gold is already, playing out for a buy. But whatever the structure gave us is what we are going to play with. So we want this gold to close above this place. When it does that, then we'll now be looking out for a buy on gold. That's for gold. For BTC, we are looking for a sell. Any buy you see is going to be temporary. Any buy on BTC that you see is going to be temporary. I want you to pay close attention. Any buy you see on BTC will just be temporary, something like this. So you will see that then it can now begin to sell down. You get it now. Any buy on BTC is going to be temporary now, except if the market has decided to turn. So we are expecting buy on gold, we are expecting sell on BTC. So on USD JPY, we are expecting a buy also, but this correction must be very clear, but we are expecting a buy. If all the condition as of today remains, we are expecting a buy on USD JPY. And of course, AUD JPY, the only reason why we will now buy AUD JPY is when the risk sentiment changes from risk off to risk on. And we are going to be watching the market closely. If the VIX move very close to 20 or below 20, and the S&P 500 jumps above the cloud, the Dow Jones Industrial Average jumps above the cloud on the daily, then we are back to risk on, then we can take position for a buy on AUD JPY. Otherwise, we are going to be very careful with AUD JPY. Even when it looks tempting, you will just stay off, because AUD JPY during risk off is going to experience a more sell than a buy. Are you getting it now? So that's how you overview the market with ease. So even if you have 10,000 dollars of your own personal money in your account, you will be able to enter the trade with a relaxed mind. If you now have the opportunity to have huge capital, you can still trade the market. Why? Because you are trading from a professional standpoint. You are not just gambling. And this is what we do at Potential Miners International. I wouldn't know if you have been getting value from our videos. I hope you have been doing so. If that is the case, I want you to subscribe to this channel. I want you to turn on the notification bell so that you can get updates anytime we post any video, and keep liking the video and keep sharing it. You can't tell, you might be helping somebody by sharing our video, and we are committed to this. Is a lifelong journey for us, because it took us over 6 years to be able to come up with a robust holistic framework of analysis of the forex market, and we are ready to preach this like the new gospel in the forex market to everyone we come across. And I want you to join us in that same spirit to preach the new gospel, that you can trade the forex market and make money consistently without having to expose yourself overly to the risk of the market. Until I see you in the next video, I remain Mr. Akimbode, the King of Waves. Thanks for listening. God bless you.